So this video is sponsored by Pionex, one of the exchanges I use all the time. It's one of the main crypto brokers to Binance, so the volume is very high. The main thing that sets them apart though is that you can use free trading bots, a variety all designed to benefit from different market behaviors, whether that's up, down or sideways. You'll get 20% off all your trading fees for life with my link in the description. And if you join the Telegram, a lot of us already use it, so if you've got questions we can try and help you out.
Hello everybody, welcome back. I am going to put my webcam on at some point down the line. Just got to look a bit more presentable. Maybe tomorrow I'll do it. So let's start off with our friend Euro. I know I'm going to bore you all to death, but get started with the Euro, because what we're seeing here is this is a 4-hourly that we're looking at. First of all, we've got a bit of a rising channel, right, basically, and with this rising channel comes the realistic possibility of a breakdown from here. So it's been going on for a short period of time, so up, down, up, down, up, down, and so you'd expect us to come down and then maybe go up again. But I'm looking at this area now, this just above 109, so 109.4, 109.5, as an area where I think the bigger rejection will take place. So in the 109 areas. Now, I know what you're going to say. You've been saying this since 105, 106. I know I have been saying it, actually. I do have to admit that I have been saying it. And I've been quite surprised at the relative strength on this Euro. But it doesn't mean that it's not going to do what I think it's going to do. Got 3 drives of bearish divergence now on the daily here. And we still have that golden cross retest that we're looking to put, I suppose, to drop into, really. So the channel that we've got, this rising channel, although it's very messy when you look at it on the daily, the 4-hourly is a bit cleaner, is backed up by a 10 exponential sitting around 108.2, and then the Bollinger Band center sitting around 107.5, and then below there, then we do have the first portion of a retest back down to 106, which is basically a horizontal backed up by a 50 exponential, and that's fine. All of this is on the table for me. I'm very much in line with the belief that that this is actually going to break down at some point and retest the lower zones and probably form a V-shaped recovery, depending on what the ECB want to do. Now, the reason I always talk about the Euro is because it has a very, very direct influence on the Dixie, and we all know what the Dixie likes to influence: everything else. All right. Everything else. So rather than looking at the Dixie, which we'll just have a little gander at it now, there is some strength building on it right now. It's kind of weak. It's basically just a representation of the yen and the euro, which are, in my opinion, starting to curl over. Now, this might not be the one that breaks it down, but I feel as though it's been on a decent run, a very good run, very good rally now for the euro to dollar, from the bottom to the top. It's been 14%. Now that is decent. That is decent. And with that should come a bit more of a pullback. And if we are going to remain bullish, like it looks like we are, then a retest of these golden crosses, that's usually what I would expect after we get one, which could bring us down to 105, maybe even lower, depending on when we actually go about doing it. Now, I'm not looking for it to plummet straight down there. I'm looking for it to make its way down there relatively quickly, but not in the form of a dump. It depends what the ECB or the Fed want to say or do. I think that's going to help it. But as far as the chart is concerned, that's what it wants to do. S&P, still at that area, the area of significance, the area of will it, won't it, do or die, basically. Now, when I say die, I don't think it's going to die, but I do think that we are going to go into a period of accumulation at some point soon. I'm not massively bearish on this, but while at a resistance, we have to respect that that's what it is. New positions, probably not the greatest place to be doing it here, obviously. But over a couple more weeks, if we can creep out of here, whether we come down and creep out, or we'll be outside of this descending trend line. What would also happen is the moving averages would likely creep outside of here too, backing up the fact that this area now is going to be more of a support, and we're not looking at sort of much deeper corrections. They could still happen. Definitely could still happen. I was talking on the Patreon last night. I'll probably talk about it all the time anyway, is that a double bottom could form on this at some point down the line this year. So rather than looking at this to just go up or straighten and up, we could be looking at this to, I suppose, do something along these lines, boosh, and then double bottom, and from there we move up. That looks like an upside down pair of sunglasses, but you know what I'm talking about. Again, highly speculative when we're talking about the higher term timeframes, especially while we're still within this descending triangle. Right, so now let's get to the meat of the matter. Bitcoin. So we're on the 4-hourly chart here. We can see that we started to break down ever so slightly below moving averages of significance. The Bollinger Bands are quite tight, which normally leads to a volatile move. As we are below the Bollinger Band center and the 10 exponential and more or less the 21, you'll be looking for the volatility to expand downwards at this point now. But that's not too much of a problem, because since it's making up all this ground, we've got lots of areas of support. The first major one is going to be this area here. It's going to be 21,500, where we found a bit of resistance after the first initial portion of the mega pump above the descending trend. And so I'll be looking for that to first of all be the major area of support. If that breaks, then we go down by another 1,000, and then possibly another 1,000 after that. So incremental steps down of $1,000 each time, more or less, give or take. And again, I'm still pretty pleased with the way that this chart is. I'm not massively concerned about it, really. It's just looking for a consolidation. We've been waiting for that for a little while now. And let's have a look at the 12-hourly. So the 12-hourly incurred a golden cross. That's the 200 exponential is sitting below 19. 50 exponentials at 20,000 flat. That's all very good, and that's all very nice. And the daily. So what do we have here? So the 200 exponential starting to get a bit of an uptick on it now, sitting around 21,300 over the next couple of days. That'll likely be above 21,500, which is the top of this box, this major support box. And the 21 exponential is in the box, 20,600, and the Bollinger Band center will be creeping up there as well, over the next few days, 20,500. So the reason I'm sort of marking off all these areas or putting them out there is that there is lots and lots of strong support below us. So we're floating around in this area with the possibility of moving up to 24,400 and maybe a little higher. That is still definitely possible. I'm not ruling it out. And we are technically, as I pose, getting support on this 7 simple moving average. And 7 simples, when we see 7 simples being used in either a bullish move or a bearish move, they're normally the last stage of buy the dip, I suppose. So there's always the chance that this will ricochet up to the top. We'll just go up to the last bull market. I mean, on any trending move, you'll see that. So when were we super turbo bullish all the way back down here? So the 7 simple does get used, and it normally leads into a dump because it's the last stages. So we get the 10 exponential is a very good one. 7 simple got it here, and then a bit more of a dump. 10 exponential, 10, 10, 7, 7, 7, boosh, bit further down to the center of the Bollinger Band. Again, very bullish over here, floating outside the Bollinger Band. 10 exponential, 10, 7, up, down, down, up, 7, 7, down. Anyway, you get the point, right? So it's not the neatest thing you've ever seen, but normally when the 7 simple moving average starts to get picked up and used, it is the last stages before something gets overheated and we come down for a bit more of a deeper correction. Not always the case, but it's an observation, and the way I would like to see it is that yeah, of course we can continue up using that 7 simple as we have done here, and we may be doing here, and it'll be the latter stage of this. I'm not going to call it parabolic, but an aggressive move up. So after this, we're looking for a deeper pullback, deeper consolidation, maybe even a dump, but it's still fine as far as the general structure of the chart is concerned on the higher term timeframes. And just to hit that home, we'll take it to a weekly, and the weekly has cleared so much ground. We've got all this area below us as well, which is going to week by week creep up, and with the supports getting higher and higher every time. So all I'm trying to put out here is that Bitcoin might be finishing its stage of the run now, and with that we look at the Bitcoin dominance chart, which also did break above 44. It didn't break down below it. It actually gauged support on it, and so it makes it feel at this stage that maybe altcoins are too risky to try and get involved in. And if we're going to do any kind of major alt season, or at least an alt season of significance, we'll wait until we get into the 46 to 48% dominance, and we can have a look at some kind of rejection area from there. That could offer a bit more, a bit more significant gains for us, really. That's where we could do, anywhere from 50 to 100 or more percent, not X. God, not quite ready for that yet. But that's where those sort of moves can happen. Now, we could obviously come down from here as well. These charts, they are not crystal balls, they're just risk to reward, and it would appear to me that while getting a support on this level, and with Bitcoin looking a little a little tearful, same with traditional markets, then altcoins are likely to get harder hit than anything else. And so probably not best to enter altcoins at this particular level. Do it at some form of resistance. Don't do it when we're floating around no man's land just above support, because there is a good chance that in a dump we move up, in a pump we'll move up on this chart. So just stay clear. We were looking at on the Patreon last night a lot of altcoins, and there's many golden crosses on 4 hourlies and on 12 hourlies that haven't yet been retested. We measured the moves. For the most part they were between 12 and 16%, so roughly a 14% pullback from where they are at right now to where the moving averages are. Again, as every day that goes by, those moving averages will probably move up a couple of percent. So, you know, maybe today it's 12, tomorrow it'll be 10%. You know, over the weekend we're talking maybe 8% pullback. We're still looking for sizable pullback to have those golden crosses retested, and that is where we like to think about gauging support and then finding some kind of entry point for a decent trade. So from what we saw last night, most altcoins had that kind of setup. They were bullish, but they wanted pullbacks into these areas to make sure that they were confirmation of continuation, really. So new entry points for me don't really exist at this stage, but they might exist by the end of the week if we pull back into those areas and we see that there's a reaction there, a decent reaction. So with that said, we're just going to sit and watch and wait, watch the euro, watch American markets open, watch Bitcoin to see which direction it goes. I think it's going to come down a little bit now, incremental pullbacks by $1,000 each time, and that will be emphasized by anything that traditional markets want to do as well. And this is why we look at the S&P and recognize that, all right, fair enough, we are brewing another drive of bearish divergence on this on the daily. And we are at a major area of resistance as well on this descending trend, which is effectively still the bear market. I'm very much in favor of this being the bottom, as I've been saying since we got there, but it doesn't mean we can't come down and out, down and up in a period of choppy accumulation, which is what it's likely to be over the next, I'll probably say that over the next year for the S&P. But in the very short term, I think the signs are that we do come down. Probably by Friday we'll have seen lower prices on everything. But again, you know, don't shoot me if it's wrong. You know, this is just me trading my charts. This is how I'm going to allocate my funds, my shorts, you know, whatever. But anyway, if you appreciate the content, give us a like, leave us a comment, join the Patreon, join everything, join everything. Sign up with everything that I've got in the description below. Otherwise, if you don't need to, have a nice day. Take it easy.